what do churches and pastors need to know about minister tax and payroll compliance?
Yeah. So first of all, just knowing that there's a difference from, a ministerial classification. The IRS doesn't exactly define exactly for you. They give you criteria to determine if you're a minister or not. And so I guess the first thing that a church needs to be aware of is that there is a ministerial classification. They need to assess how that impacts them. They need to define for themselves who's going to be classified as a minister on their staff. And once that classification is made and you've identified individuals that are ministers, you need to understand that how you report their wages, housing allowance, and how you handle their taxes are going to be completely different than what you do for your non-ministerial staff. And so we have clients come to us that are new, and we'll see, it's not rare for things to be off. It's not all it's not too often, thankfully, but from time to time, we'll get clients that come in, we're onboarding their payroll. We look at their historical records and we'll see that the minister's set up incorrectly. And really it's not intuitive. Ministers have what's called a dual classification. So you have to understand there's different types of taxes involved when we talk through payroll. There's the federal income tax, there could be state income tax, or even local income tax. But then there's also what we would refer to as the payroll taxes, which are Social Security and Medicare. And when we talk about Social Security and Medicare, we really to me, they're just kind of one tax that are combined together. For the purposes of this discussion, there's income taxes, and then there's these payroll taxes, which are Social Security and Medicare. Well, you'll hear the term FICA, Federal Insurance Contribution Act, and then you'll hear the term SECA, Self-Employment Contribution Act. Those are the two different languages used within the statute. But FICA and SECA, they both are referring to the same taxes, Social Security and Medicare, all right? So going to a minister, if you're classified as a minister, those income taxes, federal income tax, state income tax, you are classified as an employee. When it comes to those payroll taxes, Social Security and Medicare, they view you as self-employed. Mm-hmm. And that's where it just gets confusing because it really just doesn't make sense, right? And there's a reason to that. That's probably beyond the scope of this discussion. But if you're someone who's an administrator at a church and you have a minister, you need to understand that for income tax purposes, as you're running their payroll, they're an employee. But when it comes to these Social Security and Medicare taxes, the payroll taxes, they're self-employed. What does that mean? That means that you're not withholding any payroll taxes when you process their payroll, and the church isn't matching and contributing and paying over those payroll taxes to the IRS.
Mm-hmm. Yeah. So along those same lines, then that's where new ministers, they're not aware.
Oh yeah.
With that, because you're paying 15.3%, the full. Social Security, Medicare, self-employed portion instead of the typical employee. 7.65% gets deducted from payroll, and then the employer pays the other half. The church is not supposed to withhold and remit because they're considered self-employed for that. So that's something we see fairly, because we do some minister tax as well, and that's something to look out.
But the drama in our tax season is typically a first-time minister, a minister that it's their first year. They received a salary and a housing allowance for the whole year. Mm-hmm. And they don't understand the concept that the church has not been withholding payroll taxes. So Social Security and Medicare. You and I, if we haven't had the chance to do consulting, maybe this is a new client that we add, right during the tax season. We haven't had a chance to go through this, or we have shared it and it was just over their head and, they didn't follow back up with us. It hits the fan whenever we go and give them their tax return and they see this huge tax due, because as you mentioned, not only do we do the 1040, which calculates the federal income tax, right? And that's based on their household income, and there's the tax brackets. Well, that's one tax, but also on that same return, you and I go and calculate this self-employment tax, which is 15.3% of not only their wages, but their housing allowance. That's a significant percentage, especially when when you take that minister's wages, you also assess the federal income taxes on top of that. You combine those two, and let's say they're if they're in the, let's say they have an effective tax rate of 10%, which is probably about average, but then that turns to 25.3% when you factor in that self-employment tax, and that blindsides them. They have no idea. And so it is common for a new minister, their first year, to all of a sudden, where they used to report their taxes before they were a minister, and they'd have, credits that would offset, and their tax liability would be, minimal. All of a sudden they're looking at a $12, $13, $14, $15,000 tax due.
Mm-hmm.
And again, it gets back to that 15.3%. When you're an employee, that stuff's being settled throughout the year.
Yeah.
So your organization is withholding 7.65% from your pay. You never see it. You can look at your stub and see it, but that's being withheld from you. And then the church is then being assessed the other half of that to get to 15.3. And they're putting their funds with yours and then sending it to the IRS. That's all happening behind the scenes. As an employee, you don't even know. You never feel it. Once you become a minister, the churches, they're off the hook. They're out of it. They're not withholding your share, and they're certainly not matching and paying over like their share. Instead, you have to go and self-assess that when you do your 1040 along with your federal income tax all at once. And TurboTax or your CPA comes and gives you the bill, and it can be an eye opener. And it happens every year.
Yeah. I like how you broke it down in those two big buckets: income taxes, payroll taxes. Minister thinking about through their tax return. On the income tax side, they get a huge benefit in housing allowance, which is shielded from federal income tax. And then on the payroll tax side, they actually take a hit. So could you maybe just walk through that, just what ministers should be thinking about at a high level on their income tax return, how those two taxes work together?
Well, so to keep with my example where we have the new minister and they see that big bill, we sort through it, we wipe away tears and we come up with a plan, and we go through that. But normally the question is like, I thought it was beneficial to be a minister. I have this housing, like why is this a good thing? And so the answer to that obviously is you got blindsided about the self-employment taxes. The benefit that you do get is the housing allowance designation that you have. When we go and calculate your federal income tax liability, we don't include the housing allowance piece. So if you got paid $100,000 for the year, $60,000 of that was wage and $40,000 of that was housing allowance. When we go and do your federal income tax calculation, we're doing it on $60,000, not $100,000.
Mm-hmm.
Okay. And so that's where the benefit is. Then we still go and do the self-employment tax calculation. And that we're looking at the full $100,000. It's your salary and your housing, and doing the 15.3% calculation on that. The savings that you get is on the federal income tax side. And so sometimes it is worth noting, and it depends on the household of the minister. Does that housing allowance offer that huge of a benefit? Well, if they have a lot of kids that they get tax credits for, and they don't have any other significant forms of income with such a large standard deduction that we have now, it's going to still save you a little bit of income tax, but maybe not as much because you have those big child tax credits that offset it. So you may not feel it as much, but certainly as you get older and you have more assets that are generating income for you, it becomes a good deal for the minister. So, but then again, you could have a minister that has significant forms of income from outside sources where it does help. The best thing to do though for the minister is you need to understand that there's two taxes, and then administratively you need to, because your church isn't just going to handle it for you. When you were an employee, the church did all the administration of settling the self-employment tax. They withheld your share automatically from your pay without your permission, right? Like the system just does it, and you don't see it. Well, now you're stuck with the administration and settling that tax directly with the IRS. And so you just need to plan for it, right? And so there's things that we recommend churches do, the CPA allowance, right? To try to level the playing field with non-ministerial employees. That's basically just taking what I recommend an 8% gross up of the wage. So whatever the church was going to pay the minister, gross that up another 8%, right? And so that's basically like the church paying their share, their half of the self-employment tax. The minister shouldn't just pocket that though. They should take all of that 8% and elect additional withholdings on their pay because they can do that. And then my recommendation too, because you understand it's a 15.3% rate, don't stop with that 8%. Go ahead and elect another 7.65% on your pay to elect that as to be additionally withheld as well. That's one of your options. And so that way it's almost like if you do that, you can push the administrative element back to the church and they can do the withholding and they're paying over federal income tax to the IRS, not payroll taxes. But when you're doing your tax return, remember it's all done on the same tax return. So the IRS is okay with you you've got your federal income tax liability and your self-employment tax liability. They get combined into one. And so you would just have a bunch of federal income tax withholdings on your W-2 that you can apply to tackle that.
I think that's a key point, especially any church administrators, executive pastors, finance team leads that are watching this or listening to this, how you can serve your ministerial staff. You touched on a great couple things there. One, if you can pay an 8% CPA offset as taxable wages for what you would typically pay as an employer for an employee.
Yeah, view it as a tax, right?
Yeah.
Like in your budget, you could just think of that as like a payroll, like a FICA tax.
Yeah. And then encourage your ministers to put another 7.65 or 8% into their extra withholdings so they don't have to mess around with quarterly estimates. They're just it's coming out of their paycheck and they get to do their tax return at the end of the year that they've paid that out and they're not paying in a large chunk would be the goal.
Touched on something important because if they don't do that extra withholding, then here are their options. They have to go do quarterly tax payments with the IRS, which means they're handling the administration. Have to remember every quarter. That's what the IRS would want you to do.
Yeah.
And then if you just fail to do that, what happens? You get a huge tax bill come April that you're going to have to pay or get behind on, set up installment plans, penalties, interest, snowballing tax debt. Those are your options, right?
For sure. Let me tag on this one more on this initial question here about housing allowance. It's a benefit, like you talked about, to ministers because you can shield from income taxes whatever you claim as housing allowance. So what are rules and best practices around housing allowance?
Yeah, so it needs to be approved by your church governance before they pay it out. So in other words, you can't retroactively, you can't go and say, hey, you know what? We're in December of the year and to date I've been paid $10,000 in housing, but really my housing allowance should have been $40,000. Change my W-2 so it shows $40,000 of pay. We can't do that because that would be a retroactive adjustment. So it has to be approved in advance before any is paid out. So you can't go back and tweak. So that's important. You need to make sure, those in charge of, like, if you have a finance committee, your elder team, your elder board, you need to make sure that you understand that you need to have a documented approval in place for all your ministers. So just have a system to do that. At ChurchBiz, we usually send out an email to our clients. We actually give them a board template that they can use. They can use it or not, but what's important is just documented, right? That they do that in advance. So ideally by January 1st, they've got, listed how much the housing allowance is and that you've approved it. Have that set. The church can amend that as much as they want. So if Pastor John wants to amend it on March 3rd and increase it, well, he can request that from the church. They can then document their approval as of March 3rd, and we can make that change then, right? So you can change that housing allowance anytime you want, but the church has to approve it, and they need to have documentation to substantiate that.